Hey everybody, Rick here with Hit and Run Candlesticks. How you doing? Hey, this is Saturday, June 1st, 2024. I want to talk about the market. We're just going to talk about the SPY today, so it's going to be a pretty short video. I've got some, and I just want to also mention, check below in the chat area for anyone that's still interested in coming to our Sunday webinar. I've got some great charts picked out going into next week that I'm going to be sharing at that webinar. So anyway, if you'd like to check it out, do that. Right now, let's look at the SPY. I'm going to start with the daily. We're going to look at the weekly, and then we're going to look at the monthly, okay? So on the daily, boom, there we go. On the daily, we had that bearish engulf here a few days ago that we ended up getting the follow through to the downside. The bulls kind of took it up a little bit, gasped for some air, ran into troubles, and then pow, took us all the way down. Now, we didn't quite make it to the 50 period moving average. Not quite. I wish we would have went there, but hey, it's just a moving average. Remember that. Always remember that. We came back Friday with an absolute vengeance in the SPY or the S&P 500. I just used the SPY as my benchmark, which is nothing more than the ETF to the S&P 500, okay? All right, so we came back with a vengeance. We closed back up over the T-line here. T-line is the black line. That's the 8 exponential moving average. We also closed back up over our green and their blue dots right here because that points out chop right through there. So we closed back up over that T-line, puts us back in a bullish, some bullish territory. Now, something I want to point out here is notice that the T-line never went below the blue dots or green dots. That's the trend indicator. And the trend indicator is still reading bullish. Anytime the T-line remains above the trend indicator, that's a sign that you still have a bullish trend. That's what we look at. Now, price action is where we're going to place some entries, some exits, some profit taking, price action or candlesticks. That's where we put together the chart patterns for our trades, okay? All right, let's take a look at the weekly chart now. Move over here to the weekly. Look at that weekly chart. Notice that we stayed above the T-line the whole time. I mean, we popped down below, but you can see we closed back over, right? All right, let's put this line right here. We're going to use some price action support here. What we want to do is we want to put multiple conditions together before we have a reason to trade, right? Well, we still have a bullish condition. And you can see here we came right off the trend indicator, back up, broke out, and then tested back below that breakout line and put a nice little wick in there. So right now, I look at this chart on the weekly, and I still see nothing but bullish. Let's go back to daily for 1 minute. But while we're on the daily, you're going to get choppy movement. Anything, let's do it this way. Anything between this high, the bearish engulf high, and let's just duplicate that. There we are. And anything below the bearish engulf, you can use the body or the low. Anything in there, there will be a certain amount of chop in the market. It doesn't matter whether we're moving down or moving up, there will be a certain amount of chop. I think if we start moving up, the chop will clear up a little bit. You'll see some really nice bullish charts. The ultimate test will be breaking out and with some follow through. Let's just start with the breakout. Let's go to the monthly chart, all right? Check out this monthly chart. Now, for those of you that follow Hit and Run Candlesticks, Right Way Options, or even BYOB trading, we're all one happy family. This chart pattern right here is a bullish Fig Newton chart pattern. And that's where we have a bullish candle, and then a candle what I call not so bullish, and then a bullish candle right here. put that together. We call that a fig Newton because it's like the fig Newton cookie. You've got that outside of the cookie here, you've got the inside of the cookie, and then you've got the outside of the cookie. You can see that the monthly chart has been extremely bullish. You can see that, oops, let's do this. There we go. You can see that price action is still above the T line, and the T line is still above the trend indicator, right? Very, very bullish. But what happens is if we go back down to those smaller time frames, like the weekly, you're going to get a little bit of chop. Not quite as bad as the daily, but you will get a little bit of chop. Notice that price is still above the T line, and the T line is still above the trend indicator. Keep trading simple. Keep it very, very simple. Let's move into that daily, and here's the daily. Let's do that same thing. While we did have some chop, some pulling back, some pullback, some volatility in here, notice that price did come back. Now that's the chop. That's where it starts to create that chop. And notice the T line actually never broke below the trend indicator. So what we want to do as a bullish trade is we want to wait till we get the signal that the bulls are stepping back in. For the bearish trade, we want to trade quite cautiously because we don't have a confirmed trend to the downside. Confirmed would be price below the T line. Let's see, it might look like this. Price, and then the T line is black, so let's do that. Black. And the trend indicator at this point will be red, so we'll make that red. All right. So now, probably maybe should have made that solid, huh? There we go. So you've got price below the T line below the trend indicator. That's a bearish sign. And we never really got that. We got chop. Oh boy, did we get some chop. But we never got the confirmation. Anyway, what I'm thinking here is bulls are rocking, so we're back above the T line. Be careful with the shorts. We'll see you all this Sunday night, what is it, June 2nd at 5 p.m. Eastern if you've registered for our webinar, our fast track webinar. If I don't see you then, we'll see you Monday in the trading room, okay? Thanks a lot, and everyone have a terrific weekend. Bye-bye.